First off, hello everyone. I also apologize. This video is going to be a little longer than normal, but I believe it's necessary due to the action on Friday, which I want to remind everyone was not the best action at all. Normally on big down days like we saw on Friday, if it happens where you sell off, have a bounce, sell off, have a bounce, and sell off, that's pretty bad. When you sell off the entire session with the only bounce attempt at 2 p.m., there being no follow through to the bounce and it completely being snuffed out with no higher highs by 3:30 p.m., you have a real serious crack in the market. And I also want to remind everybody, the move in the S&P 500, we just went from being, let me just go throw up the S&P 500 really quick. We went from being 0.5% away from new all-time highs to new 2-month lows for the first time ever. So everybody's asking me, what's the probabilities we move up or down? There is no probabilities. This has never happened before. It's brand new. I will tell you this though, normally when stocks sell off from all-time highs or near all-time highs like this, looky here, looky even here, looky here, looky right there, and looky here, it normally doesn't just last one day. You get a big nasty sell-off like this, yeah, sure, it might continue a little bit more, but you can be, you can start to look for a bounce as you get oversold. But whenever you sell off like this from the highs, that's never good. Whenever you cut through the 20, 50-day moving average on above average volume, that's never good. Whenever you break recent support levels, that's never good. When you hit new 2-month lows, that's never good. However, look at what happened the last time we broke down. We sold off for one more day, then we came back up, retook the uptrend line, and we were off to the races. Now, I will say this, that could happen this time around, but if it does, it's just going to make the charts look worse and worse and worse and worse. So first, let's go back to the NASDAQ and see that the NASDAQ, significant break on Friday, below the 50-day moving average, but we're still above those late July lows, and so that's where it's going to be a really ultimate line in the sand test. We break through there, we're going to probably fill this gap, all these gaps right here. We're going to probably fill all of these, which would coincide with the 200-day moving average, and that would be then the very next level of support I would be looking for. The NASDAQ 100, no lines on the chart, so it's a bit more clear. You can see also July lows taken out, 50-day moving average taken out, so this gap is now into play, which would coincide with the 200-day moving average. And if we do reverse higher, great, awesome. If we don't, that's where I would expect support to come in. The S&P 500 is even in a more worse situation. To me, the next level of support doesn't come to right around this, I'd say June, July kind of consolidation area, which would probably coincide with the 200-day moving average if we do it in a gradual time. If we shoot straight down, it's going to blow through those support lows, and then the 200-day moving average comes into play. And then based on the volume too, this is not as heavy volume in the S&P 500, heavy volume in the NASDAQ, and in the Russell 2000, which I can't show you volume on this, it was very heavy also. But once again, that uptrend line, significant breakage, we're still above the 50, we're still above this recent support level, and luckily most of my long positions leading up to the Brexit and post-Brexit have been in the small cap, mid cap arena. So overall Friday, while it was terrible, I still have a lot of long positions that are still in uptrends, above uptrend lines, above the 20, 50, and 200-day moving averages, and still look fine. For instance, CYBE, for instance, everything's fine. I got to stop here, I got to stop there, I got to stop there, and then there's an emergency stop here, but if it takes out this level in 50-day moving average, this one gets removed. But for instance, that's still trending up nicely. So it's not, complete carnage out there all across the board, but this is a big warning shot. And the Dow Jones Industrial Average, as you can see, also an ugly sell-off. And now I want to pull up all the oscillators just to show you too. Everybody that's saying that we have to bounce, there's no hookup in TSV. There's no hookup in MAC stochastics. They are nowhere near these oversold levels in early 2016. So to say that we're extremely oversold after Friday selling is just ridiculous because it's not true. You can see the NASDAQ nowhere near oversold levels. Same with stochastics and MACD. So until we're at these levels on these oscillators, unless we're hitting new all-time highs, in the market, I am not going to even attempt to call a bottom or even try to I can't even fathom anyone trying to catch a falling knife here. I would rather wait for the bloodshed to end and then try to go long, especially when we're heading into the seasonally worst period for stocks. We're in September to October. This is when it starts to get really bad for equity returns. So this is just a lot of things that are lining up against the market. Doesn't mean it has to follow through, but the oscillators don't show that there's any kind of hookup. The Russell 2000 has re-rolled over, as you can see here with its oscillators. It started to try to trend up on TSV, stochastics, and MACD, re-roll over. Not good. So the market doesn't look that great. And it's easier to see here. I want to show you the NASDAQ. I really pay attention to this. I would not think about trying to catch a falling knife in the NASDAQ until the RSI 14 is below 30 and then hooks back up. And as you can see, we didn't do that at all, even during the Brexit. We remained under the extreme oversold level where I start looking for a potential catching a falling knife play. So we're still nowhere there yet on the NASDAQ. On the NASDAQ 100, nowhere near yet. We got to be under 30. You can see the MACD on here clearly rolling over. I wouldn't think of going long until it hooks back up here, as you see here. Look here. Look at RSI trending up above and look at MACD trending up above. Look at RSI and MACD trending above here. So until it looks like that, until we're near these oversold 30 levels, no way. The Russell 2000, same similar situation. Downtrend, downtrend, downtrend. SPX, downtrend, downtrend. New York Stock Exchange, downtrend, not oversold, downtrend, no hooking up. So overall, everything looks really, really, really bad when it comes to the indexes. So when it comes to end of day trend following signals that we're used to, for me, that's what my website basically is based on the end of day stuff. Intraday stuff is really only posted in the chat room. The trend following long signals, we're reducing our size. So we've already gone from we never even were able to, first off, the entire uptrend from these February lows, they're once again, just like in 2013, no quote hot stock chart pattern. So it's just crazy that the beautiful chart patterns that I got accustomed to from 96 to 2008 just still aren't there at all. So we already weren't loading up in new long positions, which is why we have so many long positions. We're reducing size leading into Friday. Now after Friday, if something does trigger, it's got to remain extremely, extremely small. The only time I would look to go heavy in anything would be day trade positions. 25% of my account capital would be the max I would put in any one day trade anyway. Right now in this market environment on the long side or short side, I think 20% max account capital will be deployed for any position intraday. Swing trading, it would be even less, 10%, and trend following in a day signals. There's no way I would put 5% of my account capital in any new long position as long as the market looks like this. But that being said, don't disobey all your long signals. I got an oversold RSI pocket pivot point signal play back here in LNTH. This day, you know what's familiar about 624? That was the day of the Brexit. I didn't take the long signal. Wow, what a huge mistake. 250% gain in 2 months. Big mistake. So that's why if I get any new long signals this weekend, which I did in a very similar play, I'm only going to post that to my website. And then I'm going to go ahead and go long, but it's going to be tiny. So the new speculative long positions I'm going to take on Monday are going to be very small, extremely tight stops. But overall, leading into the sell-off anyway, we were already getting signals in hedges. I already have positions in SDOW. You can see the little white arrow here. This is whenever these positions were initiated. DGLD, see the white arrow. TMV, see the white arrow. It's the day before because it's actually the update clearly. Look at DRV. Look at when we entered DRV at the beginning of August. LABD, you can see at the beginning of August also. SOXS was our most recent signal and it worked immediately. So the point is, we've been hedging going into this move on Friday anyway. Our long positions are all showing gains, and the recent newest long positions, tiny losses, cut losses have already, most of them have been stopped out on Friday. So everything is going according to plan because the rule is we were fully long going into the month of August. When I'm fully long or over 80% long, whenever I get an inverse ETF long signal, I take it. It becomes priority over any long signal. And this time around, it worked because it hedged against our long positions beautifully on Friday. And if we do continue to sell off Monday, I have raised my stops on all of my long positions to where either 50% or 100% of my stops are below either the Friday lower day or the most recent support level. And I'll show you why that I think that they're going to be hit, because I showed you the market already. Now I want to show you some leading stocks. Look at stocks like Intel, for instance. Let's go ahead and drop this down. Look at this entire uptrending pattern from 2014. Look at this crazy V-shaped moves all over this chart. Look at Amazon.com. It was better. It was round here. There was round 2015. There was round, but then uh-oh, and oh Jesus, and now wow. Okay, so Amazon, once again, another choppy fellow. Facebook, hey, it's been a steady uptrender, but how have you liked this crazy uptrend? So Facebook, once again, not a nice smooth chart pattern. Microsoft, look at that mess. Google, it's comical to me. Apple, it's very, very, very funny. Now compare that to my recent long positions that have been uptrending more smooth, like CLR from its 2016 bottom. Not quite smooth, but pretty darn smooth. And then EBIO from our long signal in May. Not real smooth, but still, you can see the rounding out. It's rolling over now. I have a stop here. I have a stop here. And for now, final stop's here. But if it breaks the 50-day moving average on heavy volume, then that would be where the final stop goes. But you can tell by EBIO, the way it's uptrending, that's more orderly. Look at Graham, another big winner from back here. You can see it's more rounding out, and it's even still rounding out. Will it fail? Probably in this market, but the point is, compare a chart of Graham or EBIO to Google, and you'll see why we have issues and why I don't trust this particular break in the market. So everything is looking pretty iffy, even if we look at the bank stocks, Bank of America. So let's say that, oh, well, rate hikes are good for the market. Then why did Bank of America reverse on heavy volume? Why did Goldman Sachs sell off on heavy volume? Why did Morgan Stanley sell off? We know why Wells Fargo sold off, but look at that rollover. So look at the XLF. That's not good. Well, what about the safety of utilities? Why did utilities sell off? So it's ugly everywhere. I can find no safe haven after Friday. The damage has been done, like I said, with my current long positions like CYBE, where we started to enter here. We added more here. I've got the stops. I'm ready to leave with gains. And the stocks like EBIX that I'm long, I've got the stops. Here's one here, and the next stop is here. Look at where we entered. I'll be leaving with gains. So it's not a big deal what happened to Friday. It's what happens Monday, and anything can happen. Like I said, the NASDAQ sold off for one more big ugly day and reverse higher. And don't forget, on this day of the Brexit, for the first time ever in my career, I've never seen a market near new highs have a sell-off like that. I contemplating liquidating my entire portfolio that day, but I decided to let my stops work for me. By this day here, more stops triggered, and by the time the day was over, I was only 60% long from being 100% long 2 days before. But then immediately, because I was still long, slowly, by this day right here, I was back to fully invested for the rest of the uptrend that came from the market. And it was very good to small cap and mid cap stocks. So once again, I'm not going to panic sell everything in the morning tomorrow. I've got my stops. They trigger through those support levels. Then I'm out. And then I raise my stops again on the remaining positions that survive Monday's potential sell-off. If the market doesn't sell off and instead gaps higher and runs higher, great. My long positions will do well. I'll have to look to stop out of some of my hedges, either with small gains, flat, and then raise the stops on them to make sure that they don't turn into losses, and everything will be fine. But the point is, it's best to keep a calm head here, stay neutral, and see what Monday brings. Prepare for everything, because anything can happen. That's the only way to operate in a market that trades the way it does. Look at this thing. Look at this thing. There is nothing smooth. Look at 1995 and 96. Look at 97's uptrend, 99. Look at the 2003 uptrend, which is one of the best uptrends ever. Even 2009's early uptrend, and then 2013. Now, the recent one has been good overall, it appears, but when you get really underneath the surface, you can see it's a big trading range mess. And right now we're back in that trading range. As you can see, the S&P 500, we're back below the breakout levels to new all-time highs. And this is not good, and it's going to take some time to get through this. I wouldn't be looking to get long this market heavily, like I said, until you see the RSI below 30 starting to round back up and the MACD confirming the round back up. And I don't know when that's going to happen, but that will be the first technical kind of hint that I'll be looking for some kind of low. Then I'll let leading stocks guide me along the way. Now, just to let everybody know, I am looking to add some more hedges on Monday. I'm going to try. So I already have LABD, which is a biotech bear in the S&P 500. I'm going to try to get some ultra short NASDAQ biotechnology name. Let's say I do get filled. I wouldn't want to pay more than $34.29 for this position. If we gap lower in the market and it gaps up, I won't be chasing. But if I get filled anywhere here, I'm going to have a stop here, right below the low of day on Friday. I'm going to have a stop below, actually this level right back here because it's 3 cents below Thursday's low. And then if these levels fail, I'm going to have one here, and then I'll put a third one right here. But if these two levels fail, whatever the next, then this level doesn't fail, whatever the low is in between this area will end up becoming my new final cut loss area, and or I'll half it up if the market doesn't look good and I think the position will re-reverse itself. We'll see. It's data dependent as we go. I have an open mind. If I'm wrong, I cut my losses. If I'm right, significant gains. The only unfortunate part about this recent move is that I had 3 other hedges on. I was knocked out of Russ here. It has reversed back higher. I was knocked out of BZQ, I think, just the day before. What are you going to do? It might have been this day. Can't quite remember. Well, we can find out. Yep. Thursday. I was knocked out Thursday. And Friday, you can see it's moved. And then UVXY, I got in way too early, was knocked out. And as you can see, I would now have a gain on the position. Where in the heck? I know right here. Let's even say it there. So at least be up 7% from that one here, but I believe I also started here, 5% gain. So what are you going to do? Can't trade them perfectly, and that's why you have the stops. All right, everyone, Monday should be exciting. Remember, go into it with an open mind. We'll see what happens. If you guys need help with your trading, we offer a 2 free week trial at bigwavetrading.com. I think you'll find it worthwhile. Aloha, everyone.